So good afternoon. So today I'm going to continue with our group presentation, and I'm going to present the second part of our presentation today regarding this capital structure. So first we see the Boston group structure first. As we know that this Boston holding, they have these 6 divisions in terms of their business operations, which are consisting of plantation divisions, heavy industries, pharmaceuticals, finance and investment, property, and trading industry. So we see from this diagram the ownership of these divisions. Looking into this diagram, we see that Boston Holding Berhad owns 100% of their properties divisions group, comprising the Boston Properties Sdn Bhd, Mutiara Rini, Boston Realty, Boston Hotels and Resorts, and Boston Curve Sdn Bhd. Meanwhile, for the trading and industrial divisions, Boston own 100% of the shares from USC Berhad. Meanwhile, they only own 42% of the Boston Petroleum and Marketing Sdn Bhd. And as we know that the biggest share of this Boston Holdings Berhad comes from this Lembaga Tabung Angkatan Tentera. We can see from this diagram that this Lembaga Tabung Angkatan Tentera own 59.45% of this Boston Holdings Sdn Bhd shares, and they also own 30% of the Boston Petroleum Marketing Sdn Bhd. And for the 4 divisions business operation of this company, Lembaga Tabung Angkatan Tentera also own some kind of percentage into their shares for these plantations, heavy industry, pharmaceuticals, finance and investment. So basically, we look into this Boston Group structure. Lembaga Tabung Angkatan Tentera, they have considered as biggest shares in town. This considered as the biggest shares and ownership of this Boston Holding Berhad. Okay, we move into another slide regarding the shareholdings of this company. We see here the biggest shareholders that we call substantial shareholders. Mean these substantial shareholders is the shareholders who own more than 5% of their shares in the company. So we can see here the name of the shareholders. Lembaga Tabung Angkatan Tentera own 59.45% of the shares for this Boston Holding Berhad, followed by this kumpulan Wan Persaudaraan di Perbankan 10.8%, and another one is Citigroup Nomini. This one is the Employees Provident Fund Board. They own 5.10% of the shares for this company. And we look into the size of the shareholdings. The total shares for this company is 2.026 billion. The value is in ringgit Malaysia, and followed by the other shareholders. The Citigroup nominees, the other things are on less than 5% of the shares. Okay, we move into the directors' interest on the company's shares. So according to the register of directors shareholdings, the interest of directors in office at the end of the financial year in 2018 actually in shares of the company and its related corporations were as follows. So based on this data, the number of ordinary shares owned by Dato Sri Lodin Wan Kamarudin. This Tan Sri actually is the previous CEO and one of the executive directors of the corporations, and he owns 52 million of shares in Boston Holding Berhad alone. And the other divisions like Permaniaga Berhad and Boston Plantation Berhad, we can see from this data also he's the biggest ordinary shareholders of this Permaniaga Berhad and Boston Plantation as well. And in total, we can see that this Tan Sri Dato Sri Lodin Wan Kamarudin owns more than 100 million ordinary shares of the corporations. We look into the company's latest financial statement in 2019 and in 2018. So these are financial statement we managed to get from their official website. So for the past 2 years, actually, this company experiencing loss in their business operation, because the loss for the year after the taxations in 2019, this company recorded 1.386 billion ringgit in Malaysia, and in 2018, the company also recorded a loss of 573 million ringgit Malaysia. So I traced back their financials report for the past 5 years. Actually, this company, in terms of their business operation, in terms of gaining profit, this company has not performed very well in terms of generating profit from their business. And looking into their revenues in 2019 for this conglomerate, they only managed to get 10.33 billion ringgit Malaysia, and compared to 2018, their total revenue is 10.186. So in terms of the revenue growth of this company, yearly growth of the revenue is less than 5%. And we look into the details in terms of the business operations, in terms of the specific divisions. Heavy industry recorded the highest loss in their business operation in 2019, which is 1.204 billion ringgit Malaysia. And actually, this divisions, heavy industry, has been recorded loss in their business operation for the past 5 years. And in 2019, considered as a tough operations for this company, because in 2019, based on their SIC divisions, SIC business major business divisions, 4 of these business divisions recorded loss in their business operation. These are plantation, heavy industry, pharmaceutical, trading, and industrial divisions. And the total loss of this company before tax is 1.335 billion ringgit Malaysia. We look into the report of their balance sheet in 2019. The total asset of this company stand at 16.956 billion ringgit, and for their equity and liabilities, the total equity of the company in 2019 stand at 5.699 billion, and the total liabilities stand at 11.256 billion ringgit Malaysia. And based on this data, actually this company considered as a high leverage company, because the leverage ratio in 2019 is more than 50%, which is recorded at 66%, and in 2018 their leverage ratio also more than 50%, which is 57. And based on this high leverage ratio, we can conclude that this company actually operating their business depends on their borrowing and loans, and not from their equity of the company. So I can say that this company actually quite risky if you want to invest on this company. We look into the financial highlight of the company for the past 5 years, from 2014 up to 2018. So in terms of the revenue, actually this company, in terms of the growth of the revenue, actually is that this company is not performed very well, because we can see from this graph from 2014 up to 2018, the growth of the revenue is not very consistent. In 2015 and 2016, actually they're experiencing negative growth in terms of their revenue, and their profit loss before taxation and the shareholders equity here. Looking into this profit loss before taxation, in 2018 this company started experiencing loss in their business operation, and we move to this earning loss per share and dividend per share. And actually this company consistently rewarded their shareholders with issuing dividends to their shareholders. In 2014, actually this company issued 26 cents of dividends to their shareholders, followed by this 2015, 16, and 17. But their dividend issues for this by this company to their shareholders, we can see the reductions of the dividend issues from 2014 up to 2018. And what I find here, I mean, the interesting fact in terms of the issuing dividends to their shareholders in 2018, even though the company experiencing loss in terms of in their net profit, the company still issue 5% of dividends to their shareholders. And based on the reading, I found that actually this company consistently issuing high dividends to their shareholders, and sometimes they acquire loans and borrowing in order to reward their shareholders by issuing dividends. So in order to manage their financials properly, the company have to look into their policy in terms of their issuing dividend to the shareholders, because they don't specifically mention about the dividends, the issuing dividends to the shareholders in their policy. So the dividends are supposed to be issued to the shareholders based on the company's financial performance of the year. So if the company consistently experiencing loss in their net profit, I think issuing high dividends to their shareholders is not considered as a good move for the company itself. Here I can conclude that the overall business performance of this company based on their importance financials indicators shows in this slide. Actually, this company is not performed very well in their business operations for the past few years. And for the revenue growth, the company still not recorded very significant growth in terms of their revenue for the past 2 years. And due to the loss experienced by the company in the past 2 years, their return on asset and the EPS shows the negative figure. And in terms of the dividend shares, even though I've mentioned in my previous slide that this company actually rewarding their shareholders very well for the past few years, but due to their net profit performance of the company for the past 2 years, in 2019 they decided not to issue any dividends to their shareholders. And from the potential investors perspective, I will not advise the potential investors to invest on this company based on their financial situations for the time being, because the company actually have a very high debt in their high leverage. And in terms of their business operations, there's some of the business operations, the divisions recorded loss for the loss for the past few years in their business operations, especially for the heavy industry. Even though they invest, they put a lot of investment on these heavy industry divisions, but these divisions are recorded loss for the past few years in their financial year. And there's a lot of other divisions as well, such as these plantations. Also, it's not showing a good sign for in a future business, because now the plantation actually depends on their CPO price, because the plantations actually their major business of this plantation is palm oil industry. And due to the current situations, the CPO, the global price of this crude palm oil, and I don't think that this plantation will manage to record a positive profit for the coming few years, because it's very tough for this plantation industry in Malaysia as well. And due to the global economic situations currently, and linked to this COVID-19 issues as well. There's a lot of industries actually has have been affected from this COVID-19, and yeah, looking into the prospect of this company for the in the near future, it's very hard for this company to gain their composure and to put the company back in the right track in their business operations. So these are something that these are top management and the board of directors have to sit together, and it's a big challenge for these directors and those who are in this top management to come up with a very good effective strategies and proper plan in order to bring the company back into the right or into the correct track in this near future of the business, and to put the company back into to become a competitive company in the market. There are a few issues actually the management and the board of directors have been dealing with for the past few years, which are affecting the overall performance and the image of the company. The first one is regarding the financial performance. Of course, this there means the one of the very important indicators, especially to their stakeholders and the public on their perception toward the company's image. And because yeah, it's a very tough business for all industry. Actually, it's not only for this Boston Holding Berhad, I believe, because a lot of other big companies, the conglomerate as well, has been badly affected due to this global economic issues in the past few years, and especially today in 2020, there's a lot of industry has been have been affected because of this COVID-19. But somehow, in order to put this Boston Holding Berhad in the right track of their business, they have to really strategize their business operation, and have to in terms of their financial performance, they have to look into these specific issues in order to put their financial performance back into this healthy condition. And another thing is that regarding the heavy industry and plantation divisions performance, because this company, the operations, business operation of this company, then divided into 6 major divisions, and among the 6 major divisions, these heavy industries and plantations has been recorded lost in their business operation for few years consecutively. And yeah, if they can look into details into details of their heavy industries operations and the plantations, in order to reduce the loss, the overall loss of the company's profit, because the heavy industry currently they are dealing with this shipping their air transportations and the machineries. And meanwhile, for the plantation, their major contributions to this plantation division is the palm oil industry. And now the price of this CPO, the crude palm oil, is very volatile, and it's not encouraging. And I believe that if they still concentrate on their plantations and heavy industry, this company will not able to regain their composure, and not be able to not able to manage, not able to record any positive profit in their new future financial performance. And this company actually also have a very high borrowing percentage in terms of financing their business operations. And based on my reading, this company actually acquired this MHS helicopter for the past 10 years, and it's a big investment for this company actually. And because of the some of the operations of this MHS aviation company has been halted and not generating profit, and they have to bear a lot of maintenance costs in order to maintain their the aircrafts and the helicopters. So it's really part of the contributions to their to the loss overall loss of the company. And also this company actually not enough cash flow in their financial statement record. So not enough cash flow is a very is a very risk is a high risk to the company actually, because if the company still not able to have enough cash flow to finance their operations, there's a potential for this company to go bankrupt, and their leverage will keep increasing.